Hello guys, it's a pleasure being here with you today. We're not going to do much. We're just going to do a quick top-down analysis. As we all know, analyzing the market, and surfing through these time frames. It's a very important aspect of your trading. You want to know how to mingle with all these time frames, and move around in different kinds of market conditions. So this is going to be the essence of this video. So with me here is Volatility 10 index, and we're going to analyze this pair, right? So top-down analysis things, as I usually say, starts from where? The monthly time frame, right? So we go to the monthly time frame, right? This is the monthly time frame. So guys, generally, what kind of market structure can you say we have? Well, recently over here, I would say the market has been buying. Can you see that? But this is the monthly time frame, and we want to work with only the recent stuff you can see over here. This, right? So looking at this, it speaks volumes, saying the market has been selling for how many months? It has been selling for at least 6 or 7 months. Now, understanding where the market is going to is important. As we can see, this zone can serve, as a magnet that is drawing the zone. The market come into the zone. Because why? This is kind of an order block. Assuming there was a higher time frame, if you go to maybe a 6-month time frame or a yearly time frame, which a 6-month time frame will be better, or 3-month time frame, you see that this entire red candle is one order block on that time frame, right? So we can say, the market is drawing into that order block, right? But looking at what we have now, the monthly candle has been selling. You'd want to do what? You'd want to sell, because if you go to the lower time frame, all you can see is selling, and you can see the candle. It has a momentum on it. You can see how bearish it is, something like this. So this speaks volumes already. And what will you want to do? You'd want to sell, right? So just looking at this basic idea, you can get a line. This kind of analysis, we use what we call line of sensitivity to analyze this some market conditions, depending on how you want. It's not difficult, but all you just do is you take a line, and you draw it maybe on the monthly or weekly time frame on a zone that has had selling activities in the past or buying activities. I want you to draw this zone over here. Now, we might not see it clearly over here, but what I can see over here, is the rejection from this candle and the rejection over where? Over these two candles. Now, a line of sensitivity is a region of past buying and selling activities, impulsive buying and selling activities in the past. That is a line of sensitivity. And you can use it to get good zones for yourself when analyzing the market. This is how you just do it basically. You just look for a line, draw the line and on a zone where the market has bought or sold in the past. Basically, I would have wanted to use this, but since we are trading on the H4, H1, we would want to look for a zone that is very close. Now, this zone is too far for us to take a trade. You can see this. Can you see that? This is the monthly time frame. Before the market retraces into the zone, is going to take us a lot of time. But let's see whether in that zone, this line of sensitivity stuff played out. So let's say initially we're just doing our analysis and this is yet to play out, and we now saw this by marking our zone. We now marked the recent line of sensitivity that caused the rejection and all that, right? So if we go to the weekly time frame, remember I said this has not happened. That means this red candle is still here, and this green candle is yet to occur. So in a situation like this, you can see when we drew our line of sensitivity, look at the zone on the weekly time frame. This rejection is not a small rejection, because the market tapped into the zone and sold for weeks. And over here, the selling activity, it will be for months or so. You get? So there's definitely something making the market react from that zone. That means that region, that line of sensitivity region, there's something beautiful about it that's making the market react. So when you now mark it, you now go to the daily time frame. Remember, as I said, that is yet to play out. Although it's looking squaffy on the monthly time frame, but look at what we have over here. You can see we have other blocks, an other block over here inside the line of sensitivity. And normally, when you do this analysis, if you see another block inside your line of sensitivity, it's a high probability setup. And you can see the market came into that zone and sold off, just with this basic idea of this line of sensitivity stuff. Now, I'm sure you're confused to an extent, all right? No problem. Let's start again. This is just an explanation, showing you how it's played out in the past. Let's do a fresh one. Let's go to the monthly time frame. So, as we said, we are selling, right? And we want to mark out our line of sensitivity. We're going to mark it in a zone, the most recent zone that we think we can use to take a trading activity. So, what do? You just take this your line and put it in the nearest zone that had selling and buying and selling activities. Which zone was that for me? I'll mark this zone. Reason being, market got here, rejected. Market got here, rejected. We can't see more rejections over here. Market got here, rejected. So if we go to the lower time frames, we're going to see more rejections because this is the monthly time frame. So after drawing this line, what do? Don't get confused. You just have to take it, together with your market structure. Just see that it's aligned with market structure. Are you selling? Yes. You look for a line of sensitivity that has had selling activities. So let's go to the weekly time frame. On the weekly time frame, look at what we have. Can you see the selling activity from the line of sensitivity? Market tapped into the zone and sold for how many weeks? 1, 2, 3, 4, 5. Sold for 5 weeks after tapping into the zone. Also here, the market tapped into the zone, although it exceeded a little bit. You can see 1, 2, 3, 4, 5, 6. 6 weeks, right? Look at this also. Market tapped into the zone and sold. So there's definitely something beautiful about this zone. There's something that is making the market react from that zone. And for me, we call it line of sensitivity. Okay. So looking at this concept, now what you want to do is this line that you drew on the lower time frame, you would want to see, if possible, is there another block near this line of sensitivity? Okay. If there is another block, what do you do? If there is another block, you take a marking for yourself. You mark the zone and it's your high probability order block. So let's go to the daily time frame to see whether we can see an order block near the zone. Now on the daily time frame, look at what we have. Order block near the zone or on the zone. Now look at what you have over here. You can say this line of sensitivity is near an order block. Because I'm sure if you go to the lower time frame, you find an order block near these weeks. Okay, but how do we do that? Let's confirm. Let's go to the H4 time frame to see a clearer view. But you can see on the daily time frame, we already have an order block, something like this, and it's near the line of sensitivity stuff. So initially, you have a setup with this kind of thing. But to see things more clearly, let's go to the H4. On the H4 time frame, look at what we have. Now on the H4 time frame, it's a little bit squaffy, but you just want to be concerned with the zone that has the imbalance. Can you see that? Look at the imbalance. Now an imbalance is basically just, an impulsive candle movement that left, how will I say this? That left maybe, a weak space between the two opposite candles, something like this. So you see that these candles are not matched. There's gap in between the two wicks from the opposite candles. This is an imbalance. On a normal day, a market is supposed to be moving efficiently, and the wicks there shouldn't be space between the two opposite wicks. That means it should be kind of matched. Okay, but when there is gap, something like this, you call it an imbalance. So basically, that is what we have over here. You can see the space in between this zone. Can you see it? The space, nothing here. So that is your imbalance. And whenever we see an imbalance, it means that zone is a high probability order block. But what you have to be in line with market structure to get all this is right. So this line of sensitivity, you can just adjust it, coming into this order block. Right, let's just adjust. So let me change the color. You just do something like this and you mark the zone. Yes, this is where we want to participate. and you can see it's definitely good enough. Reason being, if you look at the zone, we have a line of sensitivity which we marked right from the weekly. And what do we have again? We have liquidity. All this area is liquidity being engineered over here, right? So we can say this zone over here is a resistance, and when it breaks, some people will start buying, engineering the liquidity needed, for us to sell. Because always get one thing: if the market wants to sell, it will try to induce you to buy, and that is what is happening over here. Once this breaks, some people will start buying, because there are some people who believe, when resistance breaks, you can start going for buying opportunities. Yeah, it's right, to an extent, if you don't jump into liquidity zones like this. If you end up jumping here now, you start buying, or worst, some people wait for a retest, not knowing we're tapping into the zone, and the market most likely will drop, and they'll think it's a retest. The market will drop, do something like this, and then what? Boom, they are liquidated. So this is the liquidity engineered for us over here, and we can expect, okay, this zone has a high chance of holding out, preferably. Okay, so at the moment for me, this is my setup on volatility 10 on the H4 time frame, and we just want to exercise some patience for market to come into the zone so that we can play ball from here. Okay, so this is the basic idea over here. So you can see we have an imbalanced liquidity, and we worked with the line of sensitivity properly. Now, if you also take your Fibonacci retracement rule, you would see that that zone is a premium. Now, what I mean by premium is, when we want to sell in the market, the selling price is always expensive. Okay, you want to sell expensive and you want to buy at a discount. So for this selling market, the premium range is 61.8, 78.6 level, which is not on this my Fibonacci, but 78.6 level is usually somewhere here. 78.6 level and 90 or 100. So this is your premium range, and you can see the market is going to tap into that premium range possibly. So it's another confluence for you to take a trade. All right. So another confluence we can have. Sorry. Another confluence you can have is you can just decide to draw a trend line. Something like this. Just do something like this. Just draw a trend line, starting from this point. Hmm? Something like this. Can you see this? It's a line with market structure. Look at, right? Now you can see you want the market to tap in and drop again. So this is the basic idea, another confluence for you to take a trade, right? So at the moment, this is the setup we have on volatility 10. And as I said, if the market taps into the zone, which most likely we'll expect that today, or by the end of today, for the market to tap into the zone, then we can hop in and sell. So that's it for me, guys. Hope you really learned something from this short video. All right, guys, I also offer mentorship services where me and my students will run intensive drilling sessions on issues he or she is facing in the trading, and we just discuss that basically and try to sort that out with one-on-one classes, because that's what I do. We do one-on-one classes with my mentorship students, and I also have other services. You can just send me a message via the link in the pinned comment section below. All right, so and as you can see, each student, I create folder for each student where I upload videos of every session we do with the student. You can see this. All right, so this is how I basically run it. You can send me a message if you like what you see.